Hello, friends, and welcome to the show, Your Real Estate Today. Happy Saturday. We hope that you're having a fantastic Saturday wherever you are, whatever you're doing, that you're happy, warm, dry, and ready to sit back and enjoy what we're going to talk about today. We have got more to talk about than time allowed, and that happens every week. That's the fun part about it, I guess, because there's a whole lot to talk about in the real estate market. And, I think it's important that we talk about it in such a way that you all really see what we get up in the morning and see. I'm Paul Jameson, your host. I own the Jameson family of companies. That's Jameson Realty, Jameson Property Management, Jameson Property Investments, and been doing this a long time and this show a long time. And speaking of being with us and around for a good long while in the mortgage industry, I've got Sandy Dickinson with Summit Funding here as a guest today. Hey, Sandy, welcome back again.
Hi, good to be here.
Yeah, great to have you. And this time, instead of just doing the mortgage update, I got you the whole time.
That'll be great.
Yeah, we got a whole bunch to talk about, from myths to talking about common mortgage mistakes that borrowers make. I'm going to talk about what I learned this week. I'm going to talk about rookie agent mistakes. I'm going to talk some about, we're going to talk about mortgage broker versus mortgage lender if we have time, right?
Sure.
And let's see, what else are we going to talk about? I'm going to talk about disclosures. And I'm not talking about the guy that disclosed himself during the Super Bowl. I'm talking about disclosures. Those are things that you have to say when you're getting ready to sell. So we got a load, but let's jump right in and just talk about what I learned this week. So here's some very interesting facts. The first fact is kind of cool because many years ago, for those of us that were in the industry back in 2008, 2009, we couldn't say this. 17.8 million homes are now considered equity rich. That means that the equity in their home exceeds 50%. That's pretty darn cool.
Impressive.
And that says that the housing market is alive and well and very vibrant. Also, for those of you that want to see this show in a video form, you can get on the Jameson Realty YouTube channel and watch it and see our faces and see me scratch my eyebrows and see what we're wearing and all the laughs and all the hand signals and fun stuff we do and flail around. And it's fun to watch. But, speaking of that, I did a video last week called The Biden Effect. And the purpose of that video was not political at all. The purpose of the video is when we have a new president, the effects of that on the real estate market, on what we see going on in our industry, and what I expect to see happening. And it was quite a positive message. Well, I posted it up on Facebook, and then you can pay, to boost it. And I got rejected because it had the word Biden in it. They will not let me do that. So you can get on my YouTube channel and watch it. But you talk about just like, really? And I have a screenshot of the rejection. And it's just like, you talk about free speech getting beat up. It is very sad right now. And, here's the thing. Sandy, do you know what the pessimism principle is?
Glass half empty? I don't know.
Pessimism principle is this. Like, let's say I called you up and I said, Sandy, you're not going to believe this. I got a stock tip for you. This stock tip is so good that within the next month, that stock that I'm telling you about is going to go up 10 times the price of what it is today. Now, let me tell you what Sandy would do. Sandy, as kind and sweet as she is, she would say, yeah, Paul, great. Yeah, hey, thanks. Yeah, great. And move on. But guess what? What if I called Sandy and I said, Sandy, that stock that you just bought, they're under accounting scrutiny. They're getting ready to be audited by the SEC, and they're talking about multiple lawsuits across it for all the corruption. And the president of the company, ran over a puppy this morning. You're going to stop what you're doing and you're going to listen to me, aren't you?
Yeah, I'm like, why are you bringing me down, Paul?
That's right. The pessimism principle says you get more people's attention from negative, pessimistic news than you do positive, optimistic news. So the pessimism principle is alive and well. So here's where it came into play for me this week. My pop, my mentor, my dad is 94. He called me and said, son, I'm a little worried about you. I said, Dad, why are you worried about me? He said, because we're in a depression. I go, we are? He says, yes, we are. He said, everything's falling apart. That COVID virus is killing everything. It's terrible. Your market, your housing, you can't get a house. Everything is bad. The sky is falling. He says, that's all I hear. That's all I hear about it. And I'm worried. I said, Dad, wait a minute. I said, the hospitality industry is decimated right now. But realistically, I think when things take hold again, that market will recover relatively quickly. I said, but Dad, I said, I want to share a different perspective. I said, when my feet hit the floor in the morning, here's what I see. I said, I see a market pretty much across the country that has no inventory for housing. And in our market alone, it's less than a month. I see houses selling for way over asking price. I see interest rates at all-time lows, below 3% on average for a 30-year mortgage. I see money. People have money. They've saved at a higher rate because they haven't traveled. They got dough sitting on the sidelines, and there's a tremendous amount of money out there. The stock market is setting records every single day, and people's 401k and IRA are shining like a new penny. I said, yes, there are some negative aspects, but we're in a very thriving mode right now. He said, well, I didn't know that. He said, why don't I know that? Why don't they talk about that on the news? I said, because that doesn't sell. And those that are listening to me know what I'm talking about. This is not a political conversation. This is a communication conversation. So watch my video on the YouTube channel. It's called The Biden Effect. And basically it talks about, in a little bit more detail, the good indicators that are out there. I'm a realist. I'm not all flowers and roses. But there's a lot of good indicators that a lot of people don't really recognize and understand. And here also is a good news that nobody really talked about either. So there's this young woman by the name of Haley Bridges. She's 17 years old. She's from Appleton, Wisconsin. And she had a friend. She worked at Chick-fil-A. She had another friend at Chick-fil-A whose name is Hokalua Hanaguchi. And Hokalua, I'm butchering the name, rode her bike to Chick-fil-A every day because she did not have the money to have a car. Well, Haley, in a raffle, won a brand new car and gave it to her friend.
How nice is that?
There's good stuff out there. Can I get in the raffle for the car? I'd like to.
I'll give you one if I win one.
Okay, sounds good. And last, smart homes are growing in popularity. The 3 most popular features of a smart home are smart lights, turn on and off with your phone, smart security, which you can work from your Apple Watch, and smart climate control. Smart homes rock. Coming up after the break, Sandy's going to give us the mortgage update. We've got so much more to go over. The show, Your Real Estate Today, here on Newstalk 1110 99.3 WBT. Stay with us. Welcome back. The show, Your Real Estate Today. Paul Jameson, your host, here with my good friend Sandy Dickinson with Summit Funding, and helping me, as he always does, to make this show go off right, my good friend TJ. He is here making all the knobs work and the volume work and making whatever I say sound way better than it should. So I'm excited to have him in here. Thank you, TJ, for being here again on a Wednesday, because he's got to basically come in early to do this for me. So thank you again for that. Even though we act like it's Saturday. Oh, it is Saturday. Yeah, that's right. All right. Well, Sandy, I got on my high horse there in the first segment. We didn't get the mortgage update in. Can we start there, and then we're going to jump over to the balance of the myths. You know, we've been working on the myths now for 3 shows.
Yep, and we're going to get through them.
No matter what. All right, what's going on in the mortgage market?
Let's see. So rates are still good. They are anticipating that they're going to go up. But they keep talking about inflation, but we're not seeing it. So the CPI report came out, and it was basically the core rate was flat at 1.4. Once you take the food and energy prices out, which are those that tend to skew the number, it's basically flat. So we're not seeing any inflation, which is a good thing for the rates. Rental prices are up 2.1%.
Yes,
and that's in spite of the fact that New York is down 18%, San Francisco 22%, and Boston 9%. So that's an average rent, and it's up 2.1%, which is interesting. So mortgage apps were down a little bit this week, as were refis, but year over year they were still up. Purchases 17% and refis 46%. And the rates are still about three quarters of a point lower than they were last year.
Yeah, that's pretty amazing. Well, you know why those big cities you mentioned are down, right?
People are moving out.
Yeah, they're coming here.
I like it.
Here, Knoxville, Jacksonville, they're coming. They got to learn to say, hey. There, you know?
Syllables.
Yeah,
right.
Yeah, that's right. And they've got to, when they get change, they've got to learn, here's your change, $4.53. They got to learn that one too.
That's important.
Yeah. TJ understands what I'm saying. He understands me. I know y'all do too, because most of you all are not from here that are listening right now. Anyway. All right, Sandy. So let's jump into these mortgage myths. Number 16, TJ, you missed an opportunity. Sorry, there, my man.
I need a drum roll.
Yeah. The underwriter, and you need to explain who that is. He's not the undertaker. He's the underwriter, makes all the decisions for your loan.
Which is a myth, because the underwriter underwrites to the guidelines. So if they meet the guidelines, she says yes. If they don't, she says no. And we like to present our loans in the best light. So we really tweak them and make them look good. And because sometimes there are gray areas. So if there are, then we always have the chance to argue to get the underwriter to see things our way. And we have pretty much risk-based underwriting. So we had one the other day where the underwriter didn't agree with me. And so I contacted our head underwriter, who is amazing. And she's like, yep, we're doing this loan. I'll sign off on it. So it's not always cut and dry, but basically they have to go by the guidelines.
Right. That's good. All right. Myth number 17. If you're self-employed, you can't get a loan.
Well, Paul, if that were true, you and I would not have any loans. And one of us or two of us has a lot of loans. Yeah. So no, that's false. We work with self-employed borrowers all the time. In fact, I probably do more self-employed than I do salaried people.
Right, and I know why. And that's because you know how to, you understand how to read tax returns.
Yeah, it's something that very few mortgage originators know how to do from my experience in hiring mortgage originators. So a lot of them send the tax returns up to a company and they let them calculate it for them, or they just don't know how to do it at all and they mess it up. But if you know, rather than just putting a number on a line, it's good to know what that number means in case you can manipulate it, add it back, not take it off, that type of thing. So it is important. But yes, we do self-employed all day long.
Right. Requires a little bit more paper, right?
Oh yeah, we do like the paper.
Yes. Golly, they do. They do. And they do. Okay, myth number 18. Boom. Goes back to my earlier comment. Who is president decides what interest rates will be?
That is a falsehood because the president doesn't decide. It's decided by the Fed. So he doesn't, that was done purposely when the old guys set it up. So no, the president doesn't have the power to set rates.
A lot of people think that, I think.
Well, and honestly, they're set on Wall Street because we basically are there's a correlation between the bonds, like there's treasury bonds and stuff, and that's how mortgages are bought and sold. So it's not even the Fed so much. They do try to control it, but it's basically Wall Street.
Gotcha. So the Wall Street decided by the wall. There we go. All right. Number 19, if you change jobs, you can't get a loan for 2 years.
No, we have people changing jobs all the time. Now, underwriters don't like to see a lot of job changes because it shows instability in employment. But if you've worked somewhere for a few years and you get a good opportunity and you switch, say the month before you get a mortgage, that's certainly acceptable as long as it's in the same line of work, and we'd like to see you making more money.
Yeah.
So everything, you know, we analyze everything to make sure that, you know, you're in a position to make the payments.
Right. So when you say same line of work, like if you work in IT one place, you go work in IT another place.
Right. That's right.
Okay. All right. Number 19. I feel like, what's that? Is that the countdown?
Like a Casey.
Casey.
Yeah.
No, I'm not Casey. Yeah. All right. If you see, no, this is number 20. Did I do number? Yeah, this is 20.
Yeah.
We're finally there. Do we need a moment of like celebration?
I'm sure.
All right. Refinancing your current loan means you can only borrow what you currently owe.
No, that's not true. We have people that, well, first of all, you can, a no cash out or a limited cash out would be borrowing your balance plus all your closing costs and prepaids. You can get up to about $2,000 out without it being considered a cash out refinance. You can also take cash out up to typically 80% of the value if you have that kind of equity, and you can do home improvements, you can send your kid to college, you can pay off debt, you can do all kinds of good stuff with those low rates.
Yeah, add debt to pay off debt.
That's right.
I mean, if you've got credit card debt, you know, upwards of 18, 19%, that's a pretty good way to do it. Pay it off with a 2.5% loan. Oh yeah.
Mm-hmm. Yeah.
All day long. Right. I kind of like that idea myself.
Yep, we do a lot of it.
Yeah. All right. So let's talk for a minute then about common mortgage mistakes borrowers make. One of the first ones on the list, Sandy, was not getting pre-approved for a mortgage.
Yeah, often I have people call and say, okay, I'm ready to make an offer on a house. I need a letter, but the realtor won't write an offer without a letter. And we're in a very competitive market. And I'll say, okay, let's put some numbers together and your scenario. And I start, and then the next thing they tell me is they're self-employed. Well, I can't calculate income without tax returns. So then they have to send me their tax returns, and they're in a scramble, and you know they may risk losing a house because they're not prepared to buy it.
Yeah. Yeah. We see it all the time. And that was, I think last time we talked about pre-qualification versus pre-approval, and the differences between that and how they're considered. Well, Sandy,
And the
we've
other
got
thing
more.
is, I'll just say one more thing, that they may have their heart set on a house they can't afford, and then they're
That's
never
true.
satisfied with what they can't afford.
Boy, isn't that the truth? All right. Well, we'll be right back to show you real estate today. Sandy Dickinson with Summit Funding. I'm Paul Jameson with the Jameson Companies. More to come on the show. We'll be right back. News Talk 1110 99.3 WBT. Stay right there. Welcome back. As you can all tell, I've been taking guitar lessons. I only know 2 chords, as you can tell also. But glad you're with us on this Saturday. I'm Paul Jameson, your host, here with Sandy Dickinson with Summit Funding. And Sandy, if people are interested in refining or purchase, how do they get in touch with you?
They can call my cell phone at 704-577-0144.
577-0144, Sandy Dickinson, Summit Funding. Whether you want to refi or buy or learn what you need to do to get ready, they're fantastic. All right. So we were talking a little bit about common mistakes that borrowers make in the mortgage process. We started out with not getting that pre-approval in time. And then this is an interesting one. Not shopping around for a lower interest rate or learning about the different interest rates and why they're different. You had some great comments, Sandy. What were your thoughts there?
Well, the first thing is that if you're with a lender like us, we get our rates from several different places, from investors, from directly Fannie Freddie. We could broker if we wanted to. So the rates come from the same place. Like I said earlier, they basically come from Wall Street. Lenders do add margins to them, but basically we're all about the same. So if you're happy with the person that you're talking with and you trust them to get things done, then I would probably stick with them, because what you don't want is, I had a guy come to me and they had like a really, really low interest rate compared to mine, but they couldn't do the loan. So an amazing rate doesn't do you any good if they can't get the loan done. And sometimes those low rates come with points, and people, they don't tell you that, or you don't understand, you're paying more money for a lower rate. So you really need someone with the knowledge to go over all your options with you.
Yeah, I think that's important. I agree. All right. Next mistake is failing to check your credit score in advance.
Yeah, we run into that a lot. People think they have 800 scores and they might have a 720 or 739, something right below the premium rate getter. Or there might be something on there they didn't know was on there, and then we have to take time to work to get it off if it's not supposed to be on there. So it's a good idea to check your score ahead of time, and don't think that a Credit Karma or a FICO or whatever that you pull from your credit card company is going to be the same as your mortgage lending rates, because that's a whole different algorithm. And sometimes they're higher and sometimes they're lower. Typically ours are lower for some reason.
Yeah. Well, as we found out 2 or 3 years ago, I was an example of your example, where there was a blemish caused by a medical record that one of my children caused, and we were able to get it straightened out, but I had no idea it was 90 points.
Yeah, one little thing, 90 points. It's crazy.
Yeah, and plus I put my 30 at the time, who's now 40, I 38-year-old son in timeout. It was interesting. All right.
He probably enjoyed.
He did, actually. He sent me a thank you note. All right. Common mortgage mistake borrowers make: opening up new credit cards before applying.
Yeah, so, or paying off installment debts before applying. So if you pay off an installment debt, your score goes down. Opening any new credit's going to drop your score at least for a couple months until it gets established. Any activity on that credit report is probably going to result in something negative unless unless a bad debt falls off or something. So
Mhm.
I would leave that credit report alone.
Yeah, I would agree. All right. And like missing a payment, that's a common mistake, a mortgage payment, or, worse, having a forbearance or a foreclosure or something that can
Right.
really screw up a loan.
We found a lot of forbearances after the COVID, and
Hmm.
when that was a lot of scrambling.
Hmm. Yeah. And then one that is kind of a no common sense, but also I want to add it to the next one. It says here, not saving enough for a down payment. That's a common mistake. But the next one says, not seasoning your assets beforehand in a bank account.
Yeah, it has to be somewhere where we can see where it's been. So
Mattress is out.
don't take your money and stick it in a safety deposit box and then put it back in when you're ready to buy. I've had
Yeah.
people do that, and I'm like,
Yeah.
well, you're going to have to wait until it seasons because we can't source where that came from. We have to source all the money.
Yeah.
And make sure you have sufficient funds. Like, you're going to need money even on a VA with no money down. You're going to have earnest money and due diligence and inspections and appraisal fees. So you've got to have a little bit of money in the bank, and you don't want to put yourself in a situation where you
Hmm.
don't have a nest egg to fall back on if there's a bump in the road.
Yeah, that's right. That's right. Next common mistake is applying with limited employment history.
Yeah, so and that is especially true on VA too, because they are super strict about it. But you're going to want a 2-year history of working or
Yep.
being in school,
Yep.
something like that. You have to have a history so that we can see that you are capable of keeping a job,
Yep.
because that's important to us.
Yeah. I mean, it's great too to pay cash for everything. But at some point, when you want to purchase a home, that's going to be a problem, isn't it?
It is, yeah. You have a credit score. I say you have to. There are some cases where you don't, but then your rate's going to be a lot higher, and it's just, and then you got to go track down your cell phone carrier and your utility bills, and it's a lot of work, and it doesn't always work.
Yeah. Yeah. Good stuff. All right. Forgetting to lock your mortgage rate. That's a common mistake borrowers make. Oops.
Yeah, so we have a lot of people that talk to me and they think they're locked or they don't realize that they have to lock. And so, and like I said earlier, rates do, I think they're going to be going up. So, as we talked about last time, if you're happy and you know it, lock your loan.
We sung the song. It came back. I mean,
It
that's
did.
okay. Yeah, I love that. All right. And then last, attempting to refinance after listing your home. It ain't going to work.
No, we do not do that. Why would you do this? Why would you spend money refinancing a house that's on the market?
Yeah, exactly. Well, these days, especially.
Yeah,
Before you even fill out the app, that sucker's gone.
that's the
Yeah.
truth.
So before we started the show today, I asked Sandy, just as a note to kind of follow up what I'm going to be going through next segment is, can you add any rookie lender mistakes to the mix? And you said, misquoting a guideline, not disclosing fees and rates, and quoting as a single family instead of a condo or townhome. Can you expand on those three for me?
Yeah, so different types of housing, different loan to values, different credit scores. I mean, there's so much that goes into quoting a rate. For instance, there's a 3/4 of a point hit for a condo, anything above 75% loan to value. So if they're just tossing out a rate and they don't know what you're buying, or say you're buying a manufactured home, there's pricing hits for that. You don't get as low a rate as you do for a regular, you know, cookie cutter stick built house, which the market perceives as lower risk than a manufactured home or a condo. So, or a geodesic or an underground house, something that may not be as marketable. So they
Shipping
charge more for
container.
those. So that
Yeah.
happens a lot. Or they don't know a guideline, or, you want somebody with some experience doing your loan, not just the friend that just got their mortgage license.
Yeah, it's kind of the same way in the real estate business. So, what we really are going to focus on next segment is rookie mistakes that agents make. And right now in this market, um, doesn't mean mistakes don't happen. They do. I still make them. I'm learning every day, um, but I learn from them. And we're going to talk a little bit about some things that we're seeing happening. And they say in our business that getting your real estate license kind of keeps you out of jail, but it doesn't teach you anything about this business. And there's a lot to this business above and beyond your license. So we'll be right back. Sandy Dickinson with Summit Funding. I'm Paul Jameson with the Jameson Companies. We want to spend more time with you, so hang out with us on this Saturday. We'll be right back to Show Your Real Estate Today on News Talk 1110 99.3 WBT. Hanging with us, the Show Your Real Estate Today. We're rocking in the house. We're glad that's not learned more than 3 chords this time. I've gone electric. I enjoy it. I enjoy being with you all on a Saturday. So thank you. The Show Your Real Estate Today. If you're just tuning in, the show is about real estate. I'm Paul Jameson, your host, owner of the Jameson Companies. That's real estate, property management, and property investment. What does that mean? That means we work with buyers and sellers. We manage property for individual investors, and we help people find property to invest in. And love what I do, love getting up in the morning, and it's truly a passion for me. So I love helping people build wealth every day using real estate. All right, so top 10 rookie agent mistakes. Now, Sandy, I'm going to pre-qualify this segment. You probably see some of these mistakes happen when you work with some of the realtors out there. So if you need to chime in and, kind of add some fodder, please do so.
Okay.
All right. Here is number 1. When you have your real estate license, there is a brochure that you sign called Working with Real Estate Agents. Working with Real Estate Agents is a required form that explains to the consumer, aka your future client, what your job is. One portion of that brochure talks about using your experience, diligence, skill, and knowledge to help guide them through the process, which means you must put your client's best interest first. I hear commercials on WBT about, from Rick Edelman and some of the other guys talking about being a fiduciary. Kind of the same thing, but in a different industry. We are to protect the interest of our clients. And that is what you have to do every day. Sandy's in the same business. Sandy has the same requirements, correct?
That's right.
All right. That's number 1. Number 2, failing to effectively negotiate with the other side. Now, negotiation is not an inherent skill. It is a learned skill. It is an experienced skill. Negotiating doesn't mean that you run someone over and on their last breath you get their way. Your way. No, that's not negotiating. Okay. One of the things that I love about our affiliation with Keller Williams is they talk about the win-win. Put another way, if both sides are just a little bit upset, you're probably where you're supposed to be. But in every case, you try to make it a win-win, right? You try to find a place where people meet in the middle, but you first and foremost represent your client's best interest. And negotiating truly does take practice. It takes thoughtfulness. It takes patience. And it takes breathing. Many people laugh at me because I'm Middle Eastern. Half of me is anyway. My mother was Middle Eastern. And we're very emotional. We're very passionate about what we do. So we like to, put it all out there. You watch the video, my hands are always flailing and I'm always yakking and TJ's always laughing at me. And the reality is I'm very emotional, but when I'm negotiating, I'm thinking. And in my head, I play the back and forth in my head multiple different ways so that I'm prepared to consult with my client on what options I think are about to come and what options could come and how to respond to those. And I think it's important. All right. Negotiating is an art. It is not an inherent skill. Next, common mistakes they make are failing to correctly fill out the contract. Sandy, I bet you've never seen
Yep.
that before.
I've seen that.
I've seen them mix up the earnest money and the due diligence money, where they intended to give $1,500 in a non-refundable deposit and $5,000 in earnest money, and they've got them backwards. And next thing you know, that buyer is required to write a check for $5,000 instead of, they have to write both checks, but one of them's non-refundable. That'll put a hitch in your giddy up. I see them leave things blank in a contract. You don't leave things blank in a contract. I see them not put things in the right places, fill out things correctly. You got to know how to fill out a contract. And I fill out every line in the contract, even the other side's information. It's what you do. A complete contract shows you've got an experienced agent who's buttoned up and knows what goes where. It's important. All right. Next is failing to communicate effectively. And those that have known me for the gagillion years that I've been on the air know that communication is my wagon, right? And if you call me, you're going to hear back from me. And you're going to hear a phone call back from me. If you text me and email me, I might see it, probably will see it. But I like to talk to people. And texting and emailing have their place. In a real estate transaction, sometimes you can text a response and it doesn't sound like it should sound.
True.
Of course, texting doesn't have a sound. Doesn't come across the way that it should sound. Okay? So I don't care how many emojis you stick in it, it doesn't always come across the way that it should. And emojis don't need to be in negotiating, by the way. Yeah, I think negotiations and real estate should be emoji free. Okay, so we're gonna do that too. All right, communicating effectively. You can send a deal into the weeds really quick with a text or an email. Quick. All right. Next, failing to maintain control of the client. That is a part of our job. It's an emotional process. And you need to communicate to the client good news and bad news. And you need to do it in such a way that you don't explode the transaction in how you do that. If you have an out of control client, then you've got somebody that doesn't respect your time and your knowledge, and they run all over you. That's not a good thing to have happen in a real estate transaction. Buyers and sellers, if you're not picking out someone to help you in this process that you have no respect for their time or their knowledge, and the only reason you picked them is because they charge you a lower rate, then you're getting exactly what you asked for.
True.
And that's the thing, Sandy, that's the thing too about our businesses is people make money by leveraging our experience, right?
Right.
So that was one of my favorites. Next, failing to protect their commission. Agents don't protect their commission. Why in the world wouldn't they? I mean, we're working. This is what we do. The transaction is a part of how we earn our money. And I've said this 100 times. Our money is not earned by putting a sign in the yard with your high school picture on it and getting the house under contract. You've heard my ads. I say the same thing. It's getting the transaction to the closing table. 7, new agents should get mentors and coaches. If they don't, they're going to get in trouble. 8, failing to remain positive. We talked about it earlier. You want a pessimism principle, you can watch the real estate transaction go by, and that's not good for your clients. Quit calling the baby ugly and get it done. 9, failing to treat their businesses like a business. My real estate business is a business, period. And failing to align with a competent brokerage. I'm aligned with Keller Williams. They are more than competent. They're the largest in the world. All right, Sandy, if people want to do a loan, talk to me. How do they get you?
They call me at 704-577-0144.
Great. That's awesome. Thank you, Sandy. 704-577-0144. If you want to talk to me, buying, selling, investing in real estate, we'd love to hear from you, or you need some management help, 704-846-DONE. That's 704-846-3663, or on the web at myjamisonhomes.com. God bless. Talk to you next week. Stay tuned. We'll be back next time to show you real estate today here on News Talk 1110 99.3 WBT.